What's up, everybody? Michael Silva here. You're watching the Stock Market Brief Show. We're going to keep today's episode pretty compact, but give you a lot of indicators, a lot of levels to watch out for because, well, it's going to be really a coin flip right now heading into not only tomorrow, but the following day. We have some important macro data come out. So we're going to be getting right into that. So Yellen apparently is calling CEOs personally to warn about the U.S. debt ceiling. We've been talking about credit default swaps, and some people that I've noticed think that I think they're perceiving that I think that the U.S. is going to default on its debt. That's not my base case is what's going to happen. I believe that it will get resolved, meaning that they're just going to lift up the ceiling like they always do. But I've been pointing this out because, well, in 2011, we saw a rapid rise too, giving us warning into the debt ceiling debacle. And that was when we saw that 20% drop in just a matter of a very short period of time. And that's kind of what I'm thinking here is, hey, like there are clear warning signs, and that's why we got to continue to be diligent and understand what's going on. But overall, what's the market doing? It's really just going sideways, looking at the SPUs or the E-mini S&P 500 futures, just going sideways, and we're starting to see larger volatile days. You can see basically just the length of the candles. You know, other technical indicators like the average true range, right? You would probably see that start to pick up right now as volatility sloshing around, but really we're just pinned between 4,200 and 4,100. So hopefully here in the near future, we can eventually break from that to get a more decisive action. When you take a look at the daily time frame for the SPY, I am noticing distribution days starting to build up. So I looked up for an indicator on to label them. So I found something I'll show you momentarily, but you can see we are sitting right on the quarter to date anchored VWAP. We're well above the year to date. You can see this was the year high. This is where the year opened, and this was the yearly low. So we're still doing good from a year to date anchored VWAP base, meaning that the average buyer in volume is still, in the green for the year. But I do want to call out that yes, so we have 1 distribution, 2 distribution, 3, 4, 5, and 6 distribution days. And this is really looking at, 0.2% drops in the market, but on increased volume. So we're seeing the down days, seeing more volume indicating more volume than the prior day, indicating that those are distribution type days, which means that, hey, you got to continue to be careful here. Despite it being in a sideways consolidation or sideways range, you can see even on this big up day here, it was on decelerating volume from the prior day, which is just not a healthy sign overall as the market's going sideways. So we need to see price action resolve either to the upside and then start seeing, breakout type volume, or it could potentially resolve to, obviously, the downside. Now, like I said, we have some data coming out tomorrow. It's an hour before the market opens, so it's going to be interesting to see these key levels that I'm talking about. These key levels is what the options market is priced in going into tomorrow based off of implied volatility. I share these expected moves every day with the Discord group. I share them here on the Daily Stock Market Brief Show too, but for just a couple other products. But I figured I'd give you all the expected moves on the day going into tomorrow. So these are the products. These are the upper levels, the lower levels to pay attention to. I'm not going to go through them, so screenshot this. You can add the levels to your chart because it is important. Like, for example, the Qs today, the Qs tagged their lower expected move, and they basically hung out there all day long. All right, so it's a very good risk management tool. Now, if we take a look at the SPY, 414 to the upside, 407 to the downside, and some change. So write down the change. Those are important. But I want to call out the week-to-date anchored VWAP. It's clearly acting as a level of resistance. So if you are bullish, you want price to be back above there. Now, if the day starts up over here, well, you don't really necessarily want to chase that, but you might be able to start looking for pullbacks back up to the daily expected move, or even play it into the upper weekly expected move if we start to get, stronger price action to the upside. So that's what you want to see if you were bullish. So that's about 412. If you're bearish, well, I mean, you want to be below the 5-day moving average, the quarter to date, and then obviously the month to date anchored VWAP too, which you can see it held as support, support, support. So we're kind of getting pinched between the week to date and the month to date as it stands. So really, price is consolidating, right? We expanded, now we're contracting. So now we can either be breaking out to the upside, like we said, look for that level, or if we start getting below the 5-day moving average, start to look below us to the lower weekly expected move or the lower daily expected move at 407. If we take a look at the Qs are painting a little bit different story. They're a little bit stronger. Why? Well, they're above their 5-day moving average. They're above that month to date. They're slightly below the week to date, but it is nice to see that the 5-day moving average is kind of increasing here. So if we start getting below that month to date, that opens the door to the quarter to date and the lower daily expected move. Now, if we can get below that, that's opening the door greater to 314.75. So overall, from a relative standpoint, yeah, tech is doing a little bit better, as we have seen. If you are bullish, you'd want to see price to get back above that week to date. Then we have a gap fill, and then we have that upper daily expected move there. So just a couple of things, a couple of levels to obviously pay attention to. If we take a look at ES using Bookmap, if you don't know what Bookmap is, Bookmap lets you see behind the candlesticks, right? This is why I use this software, religiously while I intraday trade. I need to know the order book, what's taking place behind the scenes, where are potential levels of support and resistance based off of real orders that you cannot see in a candlestick chart. So I want to call out a couple of things. The market closed right here, so we're looking at after hours. I just want to call out there is a big level of liquidity over here at around 4,100. So if that comes into play, see how price action acts around that and see if it can hold potentially as a level of support going into tomorrow. And if you actually take a look at the lower expected move, it's actually right there. So interesting. This was based off of options implied volatility, and we have some orders hanging out there too as well. On the upside, we have 41.71, and you can see here that order has been standing there for a while, and we have quite a bit there too as well. So those are going to be some key levels going into tomorrow to see what price action does up and around those levels. If we can break through these levels and they can all of a sudden flip and hold as a level of support, you may be able to create trade opportunities off of that too as well. If we take a look at a couple of the indicators, summation index is starting to turn back up, but it's still below the parabolic SAR. So if this starts moving up, that might indicate that we might be breaking out to the upside in the NASDAQ composite. As we talked about in the prior episode, it does look like it's tightening up here, coiling up for a potential big move. And, that could be right to the upside or to the downside. But if this does start flipping back over, we're still below zero. It could bring in some positive momentum there for the NASDAQ composite, which would be a good sign. If we see the NASDAQ advanced decline line, you can see, though, as price action kind of pressed higher, you can see the breadth kind of EMAs right here pointing down. So it tells us that, hey, yeah, the market's moving up higher, but the advances versus the declines, right? They're the internals of it are weakening, is how you can perceive that. The summation index for the NYSE, the New York Stock Exchange, does not look nearly as good. This is pointing down and not too far off from zero. If you take a look at the Saylor to Schiff tool, somebody wanted me to follow up on this one. The last signal that actually triggered was a sell signal, and then we got back above the zero line, indicating that there was a buy signal, but there was no trigger as it stands currently. What does that mean? Well, we got above zero for the rate of change, and you can see we did that on this week, but then this week never actually got above that yet. So if we actually end up closing down here, that just negates this that buy signal with no trigger. So we are still technically on a sell signal as it stands at this moment until this turns back around. And then when we do, the prior week high has to get taken out whenever that week may be. If we take a look at back month versus front month volatility, we're still relatively high, not above the 20%, which is 1.20, indicating that back month volatility is 20% higher than front month, or the VIX, right? So the VIX, you can see it's down here. Back month versus front month is up here, and you can see that the prior times when we get these readings where we're up here and we were even up here, back over here, it has marked short-term tops or pullbacks in the S&P 500, and you can see when we actually got up there right here. I mean, what have we been doing, right? We've just been consolidating. It doesn't necessarily mean that it has to sell off, but I mean, if you were aware when this happened and you just look down over here, well, price action's just been going sideways. So kind of give us that insight. And, if this starts to come off, this will start to, potentially move back down. And when could we potentially find a bottom? Well, we've also marked bottoms when back month versus front month gets down over to here to around 1%. You can see it's marked some short-term bottoms there, here, and then also right up in this area where we saw a little bit more chop before falling a little bit further. TLT took a pretty big hit today. In the last couple of trading days, I still believe that we're in that stage one where it's actually good for bonds, but I added a little bit more on the prior trading day, I think right around this point. So I'm kind of slowly building into a position. Keep in mind that tomorrow we have event risk, so this is not something that I want to just rush into with a full-size position because it still has the potential to come right back down to the lower range, right? We've been just channeling sideways. I wouldn't really think that anything's broken up until the point we try to take out these lows down here. So it's a slow roll as it stands, but we are below all those key moving averages, so we want to see those get recouped to feel a little bit more confident going forward here. You can see that here in TNX. I track these things called the zones, which help me really visualize a bunch of different asset classes quickly in an Excel spreadsheet. And I would prefer to see the TNX, light up red, which would mean that it would be a little bit up, a little bit higher, which means TLT can come down a little bit further. And then I would be looking to get more into that. But I also want the event risk to kind of get through the event risk to feel a little bit more confident about actually building out the position a little bit more. If we take a look at advanced decline line, I'm still tracking this trend line right here on the NYSE advanced decline line. So if this starts to break, that might not be the greatest sign for the overall NYSE, as it has been holding here, not once, not twice, but thrice over there. Last one I'll talk about really quick is the trend indicator, and I'm hiding the trend and I'm applying a 10-period moving average on the 60-minute time frame. I just want to show you, I haven't used this for a while because the results can be hit or miss, but when it does reach down to these areas, I just marked it, and it hasn't been here since February of, just earlier this year. So it's been a while that it actually hit down here. But when it does, it could be potentially bearish, where we moved up and you can see we sold off. Right here, we actually went a little bit higher, but then we saw kind of another hit to the downside before moving higher. So I just wanted to call out that it is getting a kind of a hot reading, which could indicate that, hey, we might potentially go down. Just be aware that obviously we have that coin flip. We have this event risk right in front of us. That's an hour before, once again, the market opens. That's all I got for you, everybody. See you later.